Hey, if you've ever watched TQQQ ripping higher, thinking it can't go much higher, I know what I'll do. I'll just get short SQQQ. Well, that may not be brilliance. It's probably FOMO, and it catches more traders than you would think. Today, I'm going to show you a simple, structured way to know which side of the market you need to put your money in. You ready? Let's go. When you look at a chart of SQQQ over a long-term chart, that's what it looks like. This is going back to 2019, but let's just go back to, let's say 2000, about here, for about the last 5 years. That's what SQQ has done over the last 5 years. Well, what about TQQ? Okay. Which of these would you rather trade? When you take a look at both these charts, you explain that we basically, SQQ, people trade it out of fear, misunderstanding, and emotional timing. And they think that high momentum is equal to weakness. But in reality, it's oftentimes equals strength. And the pullback you see in momentum is typically an opportunity to provide a pullback or an opportunity to get into the trade. So I'll explain the real flaw inside of TQQ in just a few minutes. So traders often tend to think that momentum means overbought, but in reality, it doesn't. However, we can have our bias tainted because we have that thought, we have that belief. So the belief is it went up a lot, it must fall, right? It has to happen right now. But this isn't logic, it's emotion. Their fear of missing out the downside causes them to push into an emotional trade on SQQQ, thinking that that's the smart move to make. But until you understand the structure behind it, you saw on the first two charts, SQQQ is an ugly chart to the downside, where TQQQ was definitely a tradable looking chart. So the big question we walk away with is, do we even really need to be thinking about trading SQQQ? The next slide, I'm going to explain the emotional traps that have to do with SQQQ. And they're these. The extremely high momentum readings give an illusion it has to fall soon. I used to trade stochastics all the time. I would see the stochastics run all the way to the top, and I think, well, gosh, my stochastics are up to the top. It's got to turn around. And so I didn't have other things to provide confirmation to say, hey, yeah, no, you don't want to, sell everything or sell or try to go short just because the momentum indicators are high. So most traders think the momentum indicators mean if it's high, it means overbought. Here's the reason. It went up a lot, so it must fall. And that gets ingrained that I want to believe it. But this isn't logic, it's emotion. And SQQ feeds the ego. And remember, TQQQ feeds the account. So what we find out with SQQ, it's a math problem, and why SQQQ loses even when you're right. So let's talk about what tends to happen. The daily reset that happens on SQQQ, because the actual NASDAQ actually spends most of its time going up, results in a high level of volatility drag that drags the prices out and sucks out the premiums of the entities that the institution that sponsors SQQQ has to buy to match that 3 times move on a daily basis of the Qs. So it melts over time, even if the market's flat. So remember that compounding decay because of the volatility drag. And just keep it simple. No math. Just take a look at what tends to happen. SQQQ must fight both the market and the way it's designed. And the fact of the matter is, in reality, we all want to trade the real winner, right? And The real winner in this case turns out to be TQQQ. It has trend in its favor, it has convergence of clues in its favor, and it has a higher level of probability. The research I've done on TQQQ, going back to its inception, shows that it basically will offer anywhere from 20 plus 4 to 6 plus times per year. It will go on a 20+% run during that time frame. That's why oftentimes I think it's better just to wash your hands, not even mess with SQQQ. So the market rises 70% of the time. NASDAQ techs outperform long term. And then TQQ aligns perfectly with our PEP routine and convergence scenarios, as I point out in my book, Trade Your Way to Freedom. And TQQ outperforms SQQQ in 80% of the multiple week windows. So the question then presents itself, why trade SQQ? Now I realize that for my own account, I might trade SQQQ. I may trade it once per year, maybe, but I don't do it often because I find that waiting and being patient for TQQ to turn around is where the real money lies. And those of you who've been with us for a long time, you know that TQQ and the leveraged bullish ETFs tend to outperform the downside inverse ETFs. So I encourage you over the weekend, take some time and go look at that chart that I put up. That was a weekly chart of SQQQ and TQQQ, and see which one in your own mind provides the best trading opportunity. Get my book out. In chapters 9 and 10, I go through the setups. I talk about what exactly they look at. I cover the candlesticks, and it will provide you just a refresher. Most how-to books, you don't just read them once and just put them on the shelf and go, oh, yep, know all that stuff. No, I hope you use my book, you get it out and you look at it, and then look at the chart that's on your computer and say, I can see it now. And when you say, I can see it now, and I know what actions to take, you'll know you're mastering what needs to go on. But I think you'll find that TQQQ passes the test for the PEP routine and the triggers and the setups far more often than SQQ passes them. And so as this pre-flight checklist says, what I'm looking for trend, I'm looking for momentum, I'm looking for candlestick reversal, and big point number 4, I'm looking for convergence. So if you want to master the precision entry point routine and the convergence scenarios we use that I talked about right here and today, they're all laid out step by step in my book, chapters 9 and 10. I use this with confidence and consistency, and it only takes me a couple hours a week. So you can get your copy. I'll put the link when I send out the email, or if this is over on YouTube, I'll put the link down in the description.